is. That's what I'm talking about. Oh, let's see the booting up. There we go. Hey, what's going on? What's going on? Beast Mode Brandon back again. Happy Thursday. You know it's a great day when you got the gear on. DCG Mastermind. Let's go. Anyway, today, Thursday, a little bit laid back. Just give me the first 20 minutes or so of your time. And then any questions, comments, anything that you have, second half of the call is all yours. You know what I'm saying? So I just want you to come in and be prepared for tomorrow. There's certain trades and certain techniques that I specifically use. If you don't know this now, you do know this inside the mastermind. We have the opportunity to hop on these calls live each and every day. And to me, that's unwavering opportunities, right? Experiences that not many other people could do. So for me, I'm going to call trades. You're going to see me win. You're going to see me lose. But, you know, we're going to win a lot more than we lose. And in the end, that's what makes us an expert trader. So let's get ready to rock and roll. All right. Share my screen. And here we are. All right. Let's see right here. Let me see what screen you see. All right. You see my crazy coloring book. All right. When you come into the live room, this is going to be the setup that you see. I've been running the same layout, I'd say, for probably 6-7 years. So over time, we've definitely increased our probability and added a few nuances, making us better, right? With that being said, I have OGs that have been trading with me for 6 years, 5 years, 4 years, and they like the layout, right? What I did is I took everything on this chart, compiled it into a trading view, 2 different indicators, proprietary tools that we use here inside the mastermind, combined them and made it more simplified. So you're going to hear me call out certain trades, and that is the purpose of this call, right? So let me pull this chart over so we can see it, and we're gonna pay attention to this first chart real quick, right here. All right, one of the first things you hear us call is our floor and ceiling technique, right? That is one of my staples. Been one of my staples. I actually learned this technique. I'd say I started trading in 2016. Probably learned this. Paid $4,000 to learn with one of a real popular futures trader, World Cup winner, and I took a couple techniques that he introduced and kind of made it different. So like he trades a different way. So it made me think, and this is what I'm getting at. It made me think and understand the trader I'm trying to become. So then I use this right here, this technique, and we call it the floor and ceiling strategy, right? Does it always win? Absolutely not. But you're going to hear me say 3 things you need to be a professional or expert trader. You have to stay consistent is number 1. 2, you have to trade your plan. I'm going to show you my plan. And number 3, you have to use proper risk management. Without any of that, you are going to fail as a trader. Trust me, because from 2016 to 2019, my trading was up, down, up, down, up, down. And ideally, we all want it to go straight up to the moon. But realistically, we can slowly chug our way up. And that's professional trading. But once again, that's just my opinion. So first things first, we're not going to go too far into how to trade this, but you're going to see something just like this, right? You're going to see, let me get my drawing tool. You're going to see the floor and ceiling technique. What we do is we use AI, some of our custom tools, our scoreboard to give us a bias. But in real quick theory, you have your ceiling, what we just talked about, and you have our floor, right? All we're doing is we are waiting for something to happen. What do I mean by that? So after a certain time, right, we call it the box. If price breaks right here above the ceiling, this is where we're taking our calls, right? And if we break below the floor, this is where we're taking our puts or our sells, all right? So if we take the calls and it breaks right there and it's pushing up, right, our target would be anywhere in this vicinity. If it comes up to here and then reverses, I'm classing that as a winner because, once again, we got in this vicinity, and I want to be consistently profitable, right? You got 2 options for a stop loss. If you trade with no stops, you're absolutely crazy, but that's just me, right? I always have an idea of a plan where I'm personally taking a stop out at, and I do my best. Well, in the live room, I share with you where I'm going to cut it, right? You may cut it before, and you may not cut it. That I can't. I can lead you to the water. I can't make you drink it. I can just share with you a good quality signal, something that I'm interested in, right? Because once again, I'm not telling you what to do. Anyway, I just want you to understand what we're doing, right? So that you can see if it resonates with you, and if it does, then you're going to follow suit, right? If we break the ceiling, you got two places for your stop loss. If we close below this midline, that's number one, and if we close or we break the floor, that's rule number two. Two different stops. You can use this as your stop. It's going to be much smaller than this one, but your win rate is going to be way greater if you use this one. The problem is it's just, I mean, it's a little bit larger. You know what I mean? So really up to you. Both are profitable. So I personally use the opposite side because I'm more aggressive. Now, if we break the floor, right? We break the floor right there. My stop out is either at the mid price if we close above this, a candle close, or a break of this level. And that's my line in the sand. No ifs, ands, buts. At that point, I'm cutting the trade. So you're going to hear us call, we're watching a floor and ceiling stop. If we were watching CL, right? You see the market comes out, we open. This morning in the room, we called a ceiling break right here on CL. It came right up here and came to our TP1. Here's our TP2. Guess what? A lot of us got a winning trade. We traded one contract, 50 to 72. That's about $220, I believe, on one contract. Yesterday, we ended up breaking, and this is a great example. We ended up breaking the ceiling right here and getting stopped out down here, and then we took floor breaks and came back down here to target. And yesterday was 1 and 1, so now 2 days, right? We were break even or red one day, green the next. Now you come into the next day, and I'm showing you this purposely because we don't win them all. Then we break the floor, come down here, hit TP. Now we have 2 green days, 1 red day, or slash break even, depending on how you trade it. Then we have a ceiling break here. So we have 1, 2, 3. We have 3 winners and 1 loser. Here we broke the ceiling, and broke the ceiling, came down. It's actually a loss, broke the floor. And here's a good example right here, right? So in the last 4 days, this is a tough stretch, but it happens. It happens, right? What happens is right here, if you take one contract here, and you get stopped out down there, you could take 2 contracts, knowing the probability, and at this midway point or at the TP1, you're now break even. So that's why I said you can go risk free, or I'm sorry, you can go you could do that to be break even on a losing day, or you're just going to take a small losing day. So from a this is 1 and 1. We had another 1 and 1. That's 2 and 2, 3 and 2. We're 4 and 2. Now let's go back and see some more data. We broke the ceiling. There's 5 and 2. Keep going back. Remember at the beginning what I told you. There's 6 and 2. We'll go back another day or two. There's 6 and 2. There's 7 and 2. Right here, there's 8 and 2. That's about 80% win rate. That's right on par with what we see. And there's a loser. So last 2 weeks, we started out rough, 8 and 2. If you take in those trades, so that right there is an 80% win rate, which I don't have to share with. Anyway, how do we take this one step further? Well, we take it one step further. We come over here to our scoreboard, put on the hour time frame, and you can see this right here, scoreboard. You can see right here where we have our strong buys and strong sells, and that's how I'm getting some of these trades. So it's a great AI tool that takes a whole bunch of data and smashes it together for us. Coming back to this chart, what do you see? You see the same pattern that continuously plays out. With that being said, every single morning, we give you guys stocks to keep an eye on, right? Off the watch list because we do everything together. You see this morning, you see that we have JPM and Visa for ceiling breaks, Meta and T-Mobile for floor breaks, right? Also watching CL and ES, which you see today was winners. So we have, what do we say? Meta. We were watching Meta. What I say? Meta for a floor break and T-Mobile for a floor break. So Meta never broke the floor until the end of the day. I wouldn't have taken it because if they don't happen, Meta and T-Mobile, if they don't happen before 12, I'm not taking it here. We stayed inside all day long. JPM. We called a ceiling break on this. I believe, was that today? Let me check real quick. We called, we called a ceiling break, JPM, if it does break the ceiling, which didn't break it for us. Visa, we ended up breaking the ceiling. This was the Grand Slam. So out of 4 stocks, one of them triggered. Inside the room, for some of my OG traders, we do pick more stocks to trade, but these are the super safe ones to trade, right? If you like more advanced setups, I got a whole notebook, whole pad, and today we were watching a couple other ones. We actually were watching Microsoft, MSFT, for a ceiling break. That was a winner. We were watching Apple. That was a winner. We were watching Google with an L for a ceiling break. That was a winner. We were watching Triple M for a floor break. That broke the floor. Was a winner. We were watching DIA for a floor break, and that broke the floor. It got close to the vicinity, so you went risk-free. Probably got break even on that. Last one we were watching was Target. Broke the floor, and it was a loser. So, once again, out of that, this technique right here, 5 winners, 1 loser, and then off the safe 4 or the fab 4, you had 1 very, very good winner and 1 not so good winner. So that's one trade that we're going to hear us say. If we say ceiling breaks and floor breaks, that's what we're talking about. If everyone understands that and is following me, put a 1 in the box right now. If everybody's understanding that and following me, put a 1 in the box. All right. I see a couple 1s. All right, going on to the next chart that we have. We're just going to look at Amazon, right? We're going to look at Amazon, and we're just going to put it on a 5-minute time frame, and I'm going to delete the scoreboard or hide it, and we have Swingmaster Pro AI. That is it. All right, so coming into today, right, I'm seeing right now, right, you're going to hear me say a Swingmaster Pro buy or a Swingmaster Pro sell. That's the second signal that you might hear me say. What am I talking about? Well, I'm talking about this right here. If we get this buy, it's going to give us our stop loss there. You would have got stopped out for a loss on the call side. Then right here's a perfect example of what's going to happen next. Then you're going to get your sell entry here. You see where it shows you the stop loss, and then it shows you the take profit. As we get down closer to the take profit, in the vicinity, I move my stop loss down to in profits. As it keeps pushing, I'm moving down, down, down. Guess what? I have a 50% win rate, and I am net profitable. So you're going to hear me say, all right, we're getting a Swingmaster Pro AI buy or sell. That's what I'm referring to. And if you come over to the probability, we have an 86.224% probability, right? But same thing. I put alerts into the Discord on the higher time frames. Here's the 15-minute, so that you can feel comfortable taking these trades and go risk-free. Like, check them out. You'll get something like right here where you get a buy. There's a winner. You got a sell. There's a little dinky winner. You got a sell right there. There's a grand slam. You got a buy right there. There's another winner, right? And Amazon is pretty good. Anyway, that right there is our Swingmaster Pro AI buy or sells on the day trading side. We go back here to the 5-minute time frame. This one, I'm looking at the color of the candles, which is our Swingmaster Pro AI, right? And you're going to hear us call boogie calls or boogie puts. Now, this is a day trading scalping technique, right? Which is very good for futures, but works for everything. So if we go down to the 1-minute time frame, right? And I smash all these candles together. This is what we're looking for right here. So this is what we call, if you hear us say a boogie call or a boogie put, now you might not be able to see these, but I'm going to try to make it big for you right here. Here's a textbook setup. These are textbook setups right here. I'm looking for a push to the upside, a push to reset, come into this order flow box, right? It's green. Order flow is more bullish than bearish, and I'm waiting for a reversal arrow. Does everybody see that little reversal arrow right there? If we're in an uptrend, right, and we get a nice pullback, what I'm looking for, right, what I'm looking for is this right here. I'm looking for a push up, a pullback into our zone, or order flow box, get this reversal arrow. Here's my entry. This would be my stop loss. No matter what, I set my bracket right there. and you got one winning trade. Then you get another reset. You get this reversal arrow. I'm taking my entry right here. Here's my stop out. There's another push to the upside. This move right here was enough to generate Barbecue Bob about 40% ROI on a day trade. That right there is what we call our boogies, our boogie call, boogie put. Here's another textbook entry. Reset back in here. You get your reversal arrow. We take our calls right here. There's your stop out. Nice little scalp to the upside. This works on any time frame, but I really like it on the 1 minute or 2 minute because, like I said, it works amazing when you're trying to scalp futures. Same logic coming in here today. You look at we'll go to 9:30. You look at the NQs. You trade NQs or not ES. It's the same thing. Everybody in the room took this trade right here, pre-market. There was your stop out. There was a winner. Right there's your stop out. There's a winner. Pullback, reversal arrow, winner. Pullback, reversal arrow, stop loss, winner. I'm sorry, but if you got these two winners right here, there is no need for you to take any more trades for the day. I had someone in the room today. They took 4 trades or 3 trades, and they were green. And they're like, what else are you looking at? And I said, I'm gonna share this with you. If our probability, right, is 86%, and at this point right here, we won our first trade, we won our second trade. We now have a 100% win rate. I recommend being done for the day because sooner or later, you are going to take a loss, right? And when you take losses on the boogie, you can trade all day long. I'm just sharing with you my trading plan. So like right here, you would have had your buy, stop out. You might have went risk-free right there. Here's another buy, stop out. You might have went risk-free right there. But if you didn't, you would have got nicked out for a small loss. You would have got nicked out for a small loss. Then you would have taken the call right there, stop out, and then got all your money back. If I get green, I like to stay green. So we went over our floor and ceiling technique is 1. 2, we went over our Swing Master Pro AI, buys and sells, as you're going to hear me say. And number 3, you heard me say, or you're going to hear me say, a boogie call or a boogie put. Now, the 4th trade that I go over in the room, I use everything in combination, and this is what I mean by that, right? If our order flow is bullish, right? If we're bullish, I'm looking to take breakouts. What am I talking about? Well, if we push up and come down, and we get this breakout right there, I'm calling a breakout right there. This would be my stop loss. The price comes up, comes back down, breaks out right here. I'm taking a breakout. Here's my stop loss. I'm measuring my move, and I'm taking profits up here. Now, since we pulled far back, I'm probably not taking this breakout right there. I know at the time of the day, it's probably going to get exhausted. I don't like that. I don't like that, and the reason why is because understanding the market when it gets fatigued a little bit after you got these crazy moves. Like, look, we go up, we come back down. We go up, we come back down. We go up, we come back down. We go up. This failed right there. So my theory is if we break that to the downside, this is our last swing area. So we could come all the way back up here. We could come here and reverse. We come here, reverse. We come all the way back up here and reverse. And that's exactly what we got. That's the only reason why I wouldn't take that trade. If structure is in alignment and order flow is in alignment, candles are in alignment, I'm taking this breakout. I'm taking this breakout right there 10 out of 10 times. I'm taking this breakout 10 out of 10 times. Once again, I am done. That's just me, though. Does everybody understand the 4 day trades that I will call out on many different symbols? Put a 4 in the box right now. We just call it breakouts or breakdowns, Darren. Everybody put a 4 in the box if everybody understands me. All right. Got a couple 4s in the box. Now, other trades I call. You'll hear me say, I day trade for my job. I swing trade to help grow my account. What the heck is Brandon talking about? Well, when I swing trade, I use Swing Master Pro AI, right? Keep it very simple. Sit on my hands and knees, and this is all I'm doing. All I'm doing is I'm waiting for a Swing Master Pro AI buy or sell, right? This does all the work for me. Our last buy was right here. There's my stop out, and look what happened. There's one winning trade. This right here is enough to generate 200-300% with a 2-week contract. 4-week, you probably gain 50, 60% ROI, right? But now check it out. We got a sell entry here. There's a winner. We got a sell entry here. There's a loser. We got a buy, winner. We got a buy right there, grand slam. We got a sell right there. You want to get nicked out for a loss. You got a buy right there. There's a winner. So 1 winner, 2 winner, 3 winner, 4 winner, and two losses. I thought you said this is good, Brandon. All right. Remember, I told you we stay consistent. We trade our plan. We're 4-2. Keep going back. 5-2, 6-2, 7-2, 8-2. There's 80%. 9-2, 10-2, 11-2, 12-2, 13-2, 14-2, 15-2, 15-3. All right. Out of 18 trades, we have 15 winners divided by 18 total trades. That's 83% win rate. Our probability says 86. Guess what? I guarantee you that if we go back even more, we're going to go through more winning streaks to put us on the correct side of the expansion. And that's why I call out some of the trades I take. I don't always go into a swing trade doing this, but I'm using Swing Master Pro AI, and I'm just waiting for the tool to do its job. That's one trade, one swing trade technique. The second swing trade technique is this right here. I'll sell options. I use the AI swing. You'll hear me say AI swing, and it says 7.28. What that means is that helps me pick the level of contracts that I'm taking. So if it doesn't expand outside of that, if we sell like an iron condor or a call or a debit spread, whatever, then we're going to get profits. So in theory, what we like to see is something like this right here. We're going to see something just like this, where you get a small day. That's a winner. 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 That day's a loser. Winner, winner, loser. Winner, winner. That day's a loser. Winner. 1 winner, 2, 3, 4, 5, 6, 7, 8, 9. 9, 10, and 2. That's what's 10 divided by 2. So if we sold options every single day, 10 divided by 12, it's an 83% win rate using this AI tool. That's how I'm putting them. So when I do different diamond levels for your different account sizes, I'm using this AI tool to help me get the trade. Everybody understands that? Put a 5 in the box right now. And I got more specific training in that for sure. This is just to go over why I call the trades I do. So you hear me say, I like to day trade for my job. I like to swing trade to help grow my account. And number 3, I like to use the profits between both to pay my bills and invest, right? Well, guess what? I'm using the same exact tools. Someone give me a random stock. Throw it in the box or come on the mic real quick. Someone give me a stock, a share company, Tesla. This is me entering the trades there. It alerts me to my phone, and I get an email that tell me when the buys and sells come in, and that's when I take the trades. But I don't take a swing trade just to take it. I only take a Swing Master Pro AI trade, or I'll sell for premium. I mean, this is just a couple different techniques. Plus, you got the report. That's a different technique. Weekly hit list. That's a different technique. So this is just kind of more using the same tools to keep things more simplified. So Gretchen says Tesla. All right, look at the swing trades on Tesla. There's swing trades there, and so there's days where I don't take a single trade. I might not be in a swing trade for 2 weeks. I mean, if I don't get anything, I can't take that. You know what I mean? I'm not just taking a trade just to take it. All right, if we look at Tesla on the swing trade side, our AI swing is 10. This helps us determine the contracts that we're taking. No, that's 15 alerts over the last 6 months. Yeah, we're on the daily time frame, boss. Every candle is 1 day. So this is July 1st, and this is August. Looks real small, but that's July. That's 60 days of data right here. Yeah, he says, gotcha. Yep. Same thing with Tesla. You're going to get a winner, 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 winner. This will be a loser. Winner, 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 loser. Winner, 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 winner. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, and 2. Using this AI swing to help us determine our strikes. See it? Who cares if we lose 2 trades because we won in 16 of them? Same thing with Swingmaster Pro AI, right? We get a sell right here. There's a winning trade. Buy, 2 winning trades. Here's a buy, 3 winning trades. Here's a sell, loser. There's a buy. There's what I say? 1, 2, 3, 4. There's 4 and 1. Then you got your sell, 5 and 1. Buy, 6 and 1. Sell, 6 and 2. Buy, 6 and 3. Sell, 7 and 3. Sell, 8 and 3. Sell, 9 and 3. Buy, 10 and 3. Sell, 11 and 3. Buy, 12 and 3. Same thing. 12 and 3 over the course of a year, though. You get what I'm saying? So that's only one stock. So you got about 15 trades all year long in Tesla. 12 divided by 15 was at 83. That's 80%. Would you be happy with 80%? Put a 1 in the box. If you use proper risk management, you're going to be net profitable. Put a 1 in the box, you'd be happy winning 80% of your swing trades. Now, this is on autopilot, and that's why we call it AI. We just sit back here and wait until something alerts us to take a trade. Now, when we watch Tesla, we watch SPY, we watch Qs, we watch UPS, then we get a couple trades a week, some weeks, and other weeks, we don't get a trade. And that's okay, right? Because we have different techniques to get us into different things, different times. Now, when I invest, I go down to do the weekly time frame. And I do the same exact thing as what I'm just telling you guys right now. So, I'm going to give you 2 examples. I'm going to give you one, Tesla, and then after this, we're going to open it up for questions. So, if you guys have any questions, feel free to open it up. And we're going to look at, we'll just look at Ethereum, ETHE. Now, remember, this is an investing standpoint. So, let's say we buy shares. Yes, you can buy crypto shares in the stock market. We got you. All right, we're on the weekly time frame. Let's go back. When's this? 2019. Tesla's $29 a share, right? And let's say we have 2K account to start investing. Do we all have 2K in our accounts? Put a 2 in the box if you got 2K or more. If you're watching a recording, put a 2 in the box if you got 2K or more. I'm going to show you the power of investing. We all should have that, right? If not, no worries. We get you there. Or we'll figure it out, right? So we put $1,000 in our buy right here because we got a Swingmaster Pro buy. When I invest, I don't sell. I'll buy more opportunities on a reset. This is why. If Darren goes and buys his house for $400,000 right now, and say the presidency comes in election, and the housing market was being propped up by both parties, so no matter if it was the blue or the red party that got in, the housing market was going to crash. If Darren bought a house for $400,000 and his house crashed down to $300,000, would you sell that house or would you hold it? Put it in the box. Would you sell that house or would you hold it? Darren says hold. What else we got? Hold. You're going to hold your house, Darren, when you're down 25% ROI on your investment. I'm holding it too. So now hear me out. If you buy a shares in a company of a great company that you feel has zero or little probability to go to zero, nothing's guaranteed, right? Same thing with buying your house. Nothing's guaranteed to go up over time. The probability is there for it to go up over time. So the companies like Google, Amazon, Apple, Waste Management, Procter & Gamble, those kind of companies have so much money in the play in the world and a cash reserve that if they go to zero, me, Darren, Andre, Dion, Eagle Eye, Nikki, Gretchen, and everybody else in the room, we're all fighting over our food in the river. Electric's going to be irrelevant because we're going back to the old times. Could that happen? Sure. Is it going to happen? I would bet that it's not going to happen, because if that happens, every person that is super wealthy, like the Rockefellers or Warren Buffett, right, and so on, they're going to be on the same playing field as we are. So why would they let that happen? Does that make sense? That's just my logic. Just me thinking out loud, right? Once again, you could have a different opinion, and that's totally fine. This is just my opinion. So I'm not selling my shares either, right? If my house goes down from 400,000 to 300,000, I'm adding one to my house at 300,000 to bring my cost down a little bit, right? In theory, and when it expands up, right? Waste Management, same thing. It gets beaten up, it goes on sale, I'm taking a trade. We buy shares here at 20. I'm sorry, but if my shares go from $22 up here to $67, That right there is about what, 250% ROI. If my 1K right here is worth 2K, I'm going risk-free, right? I'm going risk-free. Now hear me out. Start off at 2K. Now our 2K's at 1K. Then my 1K right here is now at 2K. I'm selling out all my money and letting 1K ride for free. So I have now 1K invested in Tesla. And now I got my 2K back in my account, exactly what I started with. But guess what? I'm still invested in the market. So now, when Tesla rides all the way up here, right? Here's 1K was 2K. So at 40, 60, your 1K is going to be 2K. At 80, it's going to be 3K, right? Now think about this. This is house money. I'm sorry, but if my 1K of house money right here is at 3K, I'm sorry, but I'm scaling out again, and I'm taking $2,000 out of the table. Now my pot in the house is 4K, and I'm letting 1K ride. Now it gets way up here, and my 1K is 4 or 5K or 8K or 10K. I'm sorry, but I'm scaling out, right? I'm scaling out. We're just going to leave it as a simple form here. So then I wait for it to go on sale and get beaten up, right? Say I still got my 1K in the market. I'm waiting for it to get beaten up, and I'm taking a buy right here at 244. Now, realistically, 244 comes back down here, comes back up. Still not adding in because my average, I bought in down there at like 22. I bought in here again at 248. My average might be 150. As we push up, I might trim my profits, and let's say we still keep 1K riding, and now our 4K, we're just going to say is at 5K. Real super conservative. And the reason why is because Tesla was a unique situation where it ripped crazy, right? Anyway, I'm waiting for a buy. We got a buy right here at Tesla. 220 is a great investment point. If we push down even more, guess what? I'll wait for us to get another buy signal. Say we got one here, and I bought one here, right? Now my cost average comes right there. The second we go up, now I'm looking to take profits to go risk-free, and I can make easily 10, 20, 30%, but ideally, I'm looking to make just a little bit more for the long haul, but you can continue to make money. We got 5K. We start off at 2K. We just grown our account on Tesla by 200% in about 3 years, 4 years. Now we go to the second stock, right? And I'm saying this real quick just to give you a perspective. Same exact thing on Ethereum. You buy it right here. We put our 1K, right? We got our sell. That's opportunities brewing. Let's go. Here we get our buy at $10. Our 1K up here is worth 2K. I'm sorry, but now our 5K is sitting at 4K. And our 2K, we put 1K into Ethereum. It's at 2K. I'm letting 1K ride, and I'm selling that back. And now I got 5K sitting back in my bank, right, on the sidelines, waiting for some crazy news to happen to give me more opportunities. And now I can add another stock to the mix, whether I want to add in Apple, Amazon, or Waste Management, or whatever you deem is a good company. You got to think outside of the box. Like Apple has such a large abundant amount of cash, it'll buy other businesses before it solely goes under. Apple would have to buy 10 failing businesses, and the iPhones, everyone would have to not buy the iPhones or Apple computers for it to fail. Could it happen? Sure. Probability of it? No. So now, you see Tesla rips back up here to 45. Now your 1K is sent back to give or take 2K. I'm sorry, but I'm trimming out. Right? So your average buy-in, I'd say, is probably, well, our buy-in was down here at $10. We get another buy right here at $10. So now, right, we're back at break even. It is another example. If you invest into something and you buy it here at $10, it goes up to $45 and then back down to $10. You have no opportunity to take any profits. You're not growing your account that way. You follow me? This is why we also call trades, like investing trades. So now, right, same situation. Say you didn't take profits. You got house money, so you made money already. Now you add in another 1K right here. So now you have a total of 2K, right? 2K at this buy at 10. At $20 or at $15, your 2K is 3K right here. Your 2K up here is worth 4K. At some point, you need to be trailing and taking profits, right? You need to be taking profits. So now we put 2K in. We don't have 5K. We have 4K. And we had 2K into Ethereum. But as this pushes up, our 2K becomes 3K. And let's say our 2K becomes 3K. I'm selling out, letting 1K ride. Now my 5's at 7K. Then that 1K that's riding goes all the way up here to all but $40. There, right there is another $2,000, $3,000. Now I'm letting 1K back into market. I'm going to erase all this. I'm letting 1K back into market, right? And check it out. I now have 1K in Ethereum, 1K in Tesla. Now my 7K plus that additional 2K, we're sitting at 9K. Remember, we have $11,000 in our accounts if we liquidated everything. We got 9K sitting on the side, and that's the power of investing for slow money. Day trade for a job, swing trade to grow the accounts, pay the bills, and use the profits of both to invest for free, so then your house money turns into more house money. Everyone's following me, put a DCG in the box. I never thought of it like that. Absolutely. If everyone is following, hey, we got tons of DCGs. And that is the method to my madness. That is why you're going to hear me call trades that I do. And that's why we go over this every single Thursday. Now, more importantly, it's your time to shine. All right. Anybody have any questions? Throw it in the chat or come on the mic right now.
Yeah, I've got a couple. You probably figured I would. So I'll throw them in the chat, and then I've got more, but I want to give some other people time to ask questions because I'm gonna have like 5 or 6 of them. But
well, just start them, bro.
Yeah. So like on the
question number 1, start with it.
On the boogie. So like you're setting, like my thing is like when I'm personally setting like stops, what's happening is I'm using Thinkorswim on the desktop, right? And I'm putting the trades there, but what I'll do is I'll have Thinkorswim on my mobile and I'll have a stop set, but I'm not actually setting it, right? Like I have it ready to execute, but I'm not setting it because for me, like sometimes it'll have a reversal and I don't want to stop out too early, right? So like my stops will be super conservative. But like when you're trading, what's happening is like you have that chart up that has the like the triggers where you can just click on the mark on the chart and it sets your stop. Like that's what I'm trying to figure out is like
it's a trigger with bracket.
Yeah, like see that's I know you said you were shoot some videos over, but like that point is like if you get into a trade like a contract for $1, right? And you say, okay, I'm going to take profit I'm going to set a trail, and that was my second question. I'm going to set a trail at like $1, a trail of 15 cents when it hits $1.30 strike, or the mark hits $1.30. So that way you're going to take at least 15% on that. But like for me, if let's say that stock is like some weird number, like the option is like $1.63 or something, right? I got to like do some math in my head to say, all right, well, where do I put the numbers? But you're clicking something on the graph where it just sets it for you based on like a threshold. So like I don't want to have to do the math. So like how do I set a stop or something? So I'm doing it by percentage, like instead of trying to do this math in my head. Does that make sense?
Absolutely. So all right, that's a good question. All right, so I'm gonna be this is what I do right here. Before I take the trade, I understand like where my stop out is and where my take profit's at, right? And the same logic, whether you trade futures or you trade stock options. So when I come into the situation, right, and I take a boogie call or a boogie put, right? Say we get a reset like we got right here, and then we take this buy right there, and then this will be our stop out. When I'm trading on options, one, you know that if price violates this, you're just going to market order out of your trade. So you don't have to put any stop in place because you're watching it, right? When I trade futures, every time I click the trigger, and stock options too, every time I click the trigger, it's going to have a stop, a TP. I'll put TP, and it's going to have a stop loss down here, right? So then I immediately click it and drag it right to the candle on the chart where the option price is, and then I have one up here, then I shoot it up higher. So I just put it because it's easier for me to put the triggers in place. Now in futures, right? In futures, when it moves up a little bit in my favor, it deletes my take profit, deletes my stop loss, and now puts it into a trailing stop automatically. In your case, since you're trading stock options, It's the same exact thing that you're doing. You just have to come to your option chain, and all it is you figure out when you're trading a contract, and if it says $3, right? You can leave it, because when you load the contract up, you know how much the price is. So all you need to do is come right here to the trigger box, and say it's $1, you immediately can say 1.25, and you can immediately put this down here at 0.75. That just took me 5 seconds to do before I even take the trade. So you have an idea of already what you're doing before you actually execute the trade. Then when you want to take it, you're going to press the buy, or you're going to press the sell. So if you look right here on my option chart, and I come up here and buy it, you can see that the take profit was right there, and the stop loss is right there. Look. So the second I take the trade, or it's the opposite, I'm sorry. If I buy it, you see right there would be where you buy it, where the trigger for the take profit, and the stop loss is below it. When I sell it, it's going to buy me right here, sell at market. It'll put my stop loss in place and my take profit for the trigger, right? So that's one way to do it. The second way to do it is, what'd you say?
Yeah, I think you'll probably cover it in the second way. So let me see what you got.
So then the second way to do it is you don't have to do any of this, and you just buy it from your mobile if that's how you buy it, right? And you just wait for price to come down. So, or what I mean by that is, like, if you're looking at the chart and you see something just like this, let me try to find a loser. Say we take our call here. This would be our stop loss. Well, price didn't come up, didn't do enough to give you a trail stop, or you never initiated it, come back down. You're just going to mark it out of the trade right there, and you're out.
Yeah, that's what I'll do. That's I'll kind of wash and market order. So like on the thinkorswim, like I get how you're setting the triggers manually, but like you mentioned, like if you're getting into the trade, is there like a line or bar you can drag on the graph to say, like, oh, here's the tip of the candle. This is where I want to set my stop, and it'll adjust that value for the trigger automatically?
So all right, if let me make sure. So if we buy the contract at $1 and we have the stop out trigger at 75 cents, that's where it's going to put that line on the graph.
Oh, so it puts the line based on the value, but I'm saying, can it work the other way where I say, hey, I have a trigger, and it'll put 2 bars on the screen, and I can just drag them, and then it'll adjust that value. Like if I wanted to use the graph instead of punching in the numbers, can I just slide the graph to like a candle? Does that make sense?
Oh, you can do that, but I'm saying once you buy it, you can just drag it right on the graph as it is. You follow me? Because the graph gives you the candles too, but of the option price. So you know exactly where you would put your stop out at when you're looking at the option price itself.
Yeah. But all right. So you take the trade, and it automatically puts the take profit and trigger. But like if I wanted to adjust those and I drag the line and I do will it give me a button to do like a replace order?
What automatically does that for you?
Yeah, I guess I'm not following. Like I'll have to mess with it
So like right here. So say the candle price is right here, right? And we do this order. There's going to be there's going to be a square right here and a line. Then there's going to be a square right here and a line. So as soon as we take that trade, 1 contract, 10 contracts, this is for a buy. This will be our stop loss. You follow me right now?
Yeah, I got that.
All right. So now once that's on the trade, let's say price goes up, comes back down, and then here's your buy. If you wanted to put your stop out right there, all you have to do is left click this one time, drag it up to right there, and then now your new stop is going to be right here, right on the graph.
And it automatically moves that order in the market for you.
It automatically moves the stop loss order up, not the take profit, because they're two.
Yeah, all right. That's what I was looking for. So like you can move your stuff like quickly, because what I'm doing is like I'm have to like
100%. So every time I do this, my take profit and stop loss is way larger than what I'm even shooting for. Then I immediately go in and put my stop where I want it to go.
Yeah, okay, that helps, because like that's the thing is like I'm losing either losing money or losing profit. I'm losing money either way because I can't react fast enough. Like I'll still like take money and take profit, but I'm like, man, that thing keeps running, which is like to my next question, which is on a trail stop. Like the trail stop will follow the peak, right? So if it's $1 and it keeps moving, but you set a
Yeah, it
50%,
follows the high.
yeah, so it'll keep going until it reverses whatever your trail stop is.
Yep.
All right. Yeah, I need
So
to
like
start. I
say
need to
for
start
instance right
using this.
here, price is moving up, comes back down, price is moving up, comes back down, price moving up, and then comes down like that. So let's say we take our entry, our buy right here, and price comes up, and I say I'm going risk free, then my stop out's right here. Even though this peak went up here and came back down, it never hit my stop out. Then as price moves up and breaks that new high and keeps coming up this way, now my stop loss, stop loss, stop loss, we reverse down from that peak and never hits it again. Then price comes up, breaks that last peak high. As soon as it breaks, it's moving my stop loss up with it, comes back down, and then right here, it's knocking me out of the trade.
Yeah, versus like if you would have just done a traditional stop limit, you would have stopped way down in that first
Yeah,
one.
exactly. So if you would have entered it here and then it went up here and then come back down and took profits right there, I mean, you can't be mad. You got a green bag. I personally use trail stops because
Well,
one out of three or 1 out of 4 trades will give you a situation like this right
well,
here.
look at Microsoft this morning. Microsoft is a good one because that's one I took the wrong direction on, but yeah, you have your box. Yeah, check that out.
So we called this one, and this is a perfect example. Why is it trail stop? Because here's the calls right here that was notified. As soon as we get in the vicinity at TP, instead of taking profits right here, right here, right here, price actually went up, come back down, and you might have got stopped out right there. You know what I'm saying?
Yeah, but if your trail was more aggressive, you could have kept riding up.
Well, loosely, if your trail is more conservatively loosely, then
Yeah,
you
yeah,
might,
yeah,
but
yeah.
you're willing to give some back. So like what Barbecue Bob does and others of us, if you trade multiple contracts, say you take 2 or 3, we all enter the trade right here. As it comes up, 2 of the 3, we're going in a tight trail stop. And the last one, we might put a stop loss right there and just
Letting
let
it
it
ride,
go
yeah.
or monitor it. As it keeps pushing up, then we're saying, all right, we're going in a new trail stop here because it's not going to go all the way up here to the moon. You get what I'm saying?
It's not crypto.
Exactly. This is what we call a moonshot in stock side. All right, what next question you got?
Yeah, I mean, those are the main ones for me. That helps a lot because that really was that trigger and that trail. So like those two things, I'm going to start to implement conservatively and make sure I'm comfortable with it. But no, it helps a lot. Thank you.
Absolutely. Who do I talk to get a copy of Swingmaster Pro AI? Hey, you looking at the man, the myth, the legend right here. You know what I'm saying? I just don't openly give it out because I don't want to set you up for failure if you're not properly trained or instructed how to do it. But if you are in the mastermind and you did attend a couple of the calls and you feel you're ready for the challenge, then just shoot me a message. We'll get you squared away.
I do have I'm trying to find it in the Discord, but you alerted on it's like the weekly swings that are you got 3 calls, 3 puts. So I wasn't comfortable about when to take those. So what I did is I put them in, let me pull them up. Let's see here. I put them in paper money to just see what they did. It was CAT, CRM, Hum, into SQQQ, and I think TLT with a 6.
All right, let's take a look at them.
Like you had 6, and so like for me, I was like, okay, there's 3 calls and 3 puts.
All right, now let me ask you something, right? Caterpillar, what level did I tell you it has to break for calls?
Well, see, that's what I didn't see because the alerts are just like they just say here the 3 calls and 3 puts.
No way. Hold on a second. Are you not seeing the same alerts I see?
Hey, hold on, I'm trying to find it in Discord.
I'll put it right here. Stocks option alerts, the weekly hit list. Every single week, I tell you the levels to take the calls after they break. Every single week, right here. All right, Caterpillar calls. What does it say right there? Caterpillar calls above up there.
So yeah, it's probably me not understanding, right? So it means once it breaks that price, that's when you take your call.
Absolutely. So now look at this. 349.60. So let me put a vertical line on my chart. 349.60 is right here. 349.60 is right here, give or take. Now this is Monday right here where my arrow's at. Did we break that to the upside on Monday?
Yeah.
All right. You're buying 2 weeks of time. Do you think this is enough money for you to take profits on that trade or no?
No, no, not a swing. And it's
Hold on
is
a
it
second. Hold on a second. Hold on a second. Hold on. What'd you just say?
no, what is that? It's what's the 348 to what from that break to that top? No.
Bro, all right, look here. This is what it is. Let me just inform you real quick. Let's go back to the weekly list again.
Well, you're looking at oh sorry, you're looking at day. I'm looking at that like minute.
All right, now look at this, right? Wait for these price points to break. What's that mean?
Yeah, once it crosses the line. Yeah.
All right. To get 131 wins this year, we're going risk-free at 10 to 15% ROI. So now let me ask you again. Do you think this little bit right here is enough to get 10 to 30% ROI?
349 to 352. Like I want to know. Like I say, that's why I'm not good at the math.
349 to 355.
Oh, because that peak, yeah. So for that swing, like this is where this is why I haven't taken any of
All
them.
right, check it out. Like I'm gonna give you homework now. So now, if it broke this, we know we're probably taking the 355 calls or the 360 calls, depending on your account size, right? Let's check it out.
And
Caterpillar,
you're always going 2 weeks ahead.
always 2 weeks of time. What do we say on there? 2 weeks expiration. So if we go the 255 or the 360s, does it meet our criteria? Open interest is good. Delta, that is fine. We'll just go with let's go with the 360s. And now you copy this. We're on 8 weeks until expiration. When this trade would have happened, this would have said 14 because it happened Monday. So
8
now you
days.
copy this and you pull up a spark chart. This is how you do all the homework yourself to see what really happened right here. Control V. Now we're going to go back here to the 5-day, 5-minute chart. And when do we say it triggered? Monday?
Yeah, Monday.
Monday morning at 9:30. These contracts are $1.93. They hit a high of the same day of $2.91. All right, so let's hear me out. $291 minus $193 is $98 for every one contract divided by 198. Is that is that ROI 10 to 15%?
Yeah, at least 49. Yeah, I'll take it.
That's almost 50. So now let me counter this back to you real quick. Mr. Darren, would you be happy? And is that a winning trade right here?
Yeah, it's definitely a winning trade.
And that's how easy it is.
Yeah, so when you get like because these
now
are
hold on a second. So now on this day, we take our call right here. Our stop out is on. We go over this every Sunday. Our stop out is the previous day's low. So that'll be our stop out. You're going to put an alert right here. If price breaks it to the downside, you're closing your order.
And all right, so you can set on this. If I took that, I could set a trigger to stop me out there or a trigger to hit when I hit a target profit, right? Like, so if, once I get TP, I'll say, hey,
No, this is what you do. You put a stop loss in place and you put, so right here, you would have entered this trade right here at 188. Previous day's low is at 93 cents or $1.08. So you'd have lost about 80 cents on this contract. This is the option candles. Now, when you take this trade and you get filled, right? When you take this trade and you get filled right here at the open, $1.93, you put a trail stop limit in. So once you go up 15% ROI, I can't tell you what to do. What I do, once I take that trade, I put a trail stop limit in place. So once it goes up 15% ROI, I'm typically going in a 10% trail stop. So I'm guaranteed 5% ROI winning trade. If you do what I just told you, average ROI is going to be about 25-30%, and the average losses will be about 25 to 30%. With an 85% win rate, you do the math. Do you follow me?
Yeah, I think what I wasn't understanding is like when I'm doing the morning trades, we're doing it right then that day in and out. Like usually,
All right, so now hear me out. Hold on a second, right? Now just remember this. When you day trade, that's one tree trunk, one branch. And inside of your tree trunk branch, you have little twigs. So you have the trend bot or floor and ceiling. you have Swing Master Pro, you have breakouts, you have boogies. All four of those day trading techniques are traded differently. Agreed?
Yep.
Then you have another branch that says swing trades. Inside of that branch, you got twigs like weekly hit list, weekly income plays, report swing trades, and regular iron condors and Swing Master Pro buys and sells. Are all five of those different techniques?
Yes.
Absolutely. And they're all traded differently. And I can't make you pick and choose which one you want to trade, but understanding how each one of them are traded, you have to figure out which one fits your trading personality or what you're trying to accomplish with the time that you have available. And I don't know that. You know what I'm saying?
Yeah, and that's why I'm here. So no, I appreciate it. Like it's that helps me on the weekly hit list because what I did is I was like, all right, I don't know how this works. So I went and just said I took a market order on all six of those at some random time of the day, right? And then just to see what it did, right? So I looked at it if it were my own money and I was going to trade it, and I looked at it today, it's down like $1,600. Like that's if I just did nothing, no stops, no take profits. So obviously, I know that's not a strategy you want to employ, right? So to me, um, in this case, what I would do, and I'm not saying it's the right way or the wrong way, is CRM, for example. I would go into TradingView, I'd set an alert for 265, approaching 265.75 or crossing above. Then I get an alert, I'd go on, I'd take a call, I'd set the trigger and the stop loss, and on a 2-week contract, and then that should it's that's how I would do it, based on what you're telling me, and that process I'm familiar with. Once I get more comfortable with the triggers, I'll probably employ some of that, but I'm going to practice it a bit before I use my own money.
All right, now you got to remember this. You can't have two closing orders on one position, so
Yep.
you can't have a stop loss and a trail stop limit.
Yeah. Otherwise, the boss will be taken over.
Well, yeah, you got to figure out which one you want to employ. Me,
Yeah.
that's why I use the trail stop limit as my closing order, and then I set an alert on TradingView and or Thinkorswim to
Yeah.
get me notified when price on the candles break where my stop loss is. That way, I don't get any manipulation or corruption on the option. Them wicking it down and stopping me out real quick when I didn't want to get stopped out. So I don't put a stop loss in place. I put the trail stop limit in place for my closing order because 8.5 or 9 out of 10 times it's getting stopped out for a winner. That one time I get an alert that says price violated that alert to the downside, and I just manually market order out, and I'm out the trade.
In that case, like in your experience of doing this over the last several years, like how many times have you seen it where you get that alert on it's hitting where your stop would be on the going down, and it starts tanking like hard, like where you're starting to take like a 60-70% loss? Like what is in your experience, how often has that happened?
I mean, to be honest with you, that really has never happened. Not saying it can't happen, but this is the thing. When I get an alert, I mean, I don't have other things going on, so I'm typically in that within 5 minutes. You get what I'm saying? Now,
Yeah.
if you get the alert and you wait 75 minutes, that's a different story.
Yeah, exactly.
The thing is like
That's why I'm
you,
asking, because I was like, man, I might get that alert and I might be like, I gotta take this like right now. So
yeah. So, and this is the other thing. If that's what you're fearful of, just deploy a small amount of capital, buy 2 contracts. So you're risking $300. Worst case scenario, you're going to lose all $300. You know what
yeah,
I'm saying? Which isn't going to happen because with 2 weeks of time, them contracts ain't going to go down that fast. Like you're going to be down 60-70% if you take like a daily expiration or next day, but with 2 weeks, they move slow, bro.
yeah, man, that's super helpful. I appreciate it.
I wouldn't say slow, but I'm talking about slow compared to our same day expirations, like really slow. Like something could drop 5 points and we're down 45%. Like, you know what I'm saying?
Yeah.
So, hey, what else you got?
What's I'm I just want to know because I see you list them all the time. What is like an iron condor? I see it's like a call and a put and a call and a put for like two of the
And
same.
hey, that's We did a class on that one. I need you to watch the video.
You gotta send me these links, man. I don't know where to
They're in
find
the
them.
Facebook group. If you look my name up, every class that I do, it's all in the Facebook.
The DCG Facebook?
Yes, sir.
Yeah, boy.
So you just got to look up, type in whatever you're trying to look. Every class that I do, it's all in there.
Man, you said you were gonna send me the links. Now you're like, go
I'll
find
tag
them.
you in it, but you're going to wait.
Yeah. Oh no, I'll find them here.
Hey, Brandon, how we get a copy of Swing Master Pro?
Don't
Shoot
wait
me a
for me.
message. I get you. The one that I just showed you right now, I didn't release yet, but the old version, the first Swing Master Pro AI, I have with the targets, but the second one that me, Jamar, and Mike was still iron out some of the things. It's finalized now. We just didn't publish it. That's the one that has the reversal arrows and the order flow lines.
Yeah, I understand. It's just tough to follow through if I can't get the tool to,
Absolutely, I got you.
that's all I'm saying. Appreciate
Yes,
you, man.
Yep. Let's see here. How do I get a copy? I got you. I would like it too. Still learning. Hey, awesome. That's daily time frame. All right. If you are on the charts day trading and see a potential setup using any chart reading technique or indicator, how do you determine strike price? All right. So I mean that's the $1,000,000 question, Gretchen, right? Because everybody's going to have a different answer for that, and the reason why. Let's say let's go to SPX, and we're all day trading SPX. We go to tomorrow's expiration, right? This is why it's a universal question, and everyone's going to say something different. We all have different account sizes. If we're taking scalp trades in the morning, right? We have people that might take $2,100 for one contract because they have $20,000, $30,000 accounts. For someone who has a smaller account, you're going to have to go way down here and take a contract for $170 or $230. And that's what they're going to tell you. So there's no way for you to determine what strike is the best strike to take, because I feel like it's dependent on your account size. However, I personally, the best bang for the buck contracts for me are these first two that are next to the purple box on the calls, and these two next to the purple box on the puts. Those are considered at the money contracts, right? Now, obviously for SPX, it's not affordable for everybody. That's why we do the SPX lottos. They're typically out of the money, and we all could put in $150, $200. But if you come back here and look at something like this on SPY, which is the same exact thing as SPX, just 10 times cheaper, now you come into a situation where if we're scalping, you want to take these contracts right here, 148, 105 if you're day trading, correction. That's just me. The reason why, if you go too far out of the money, you're really going to experience the time decay on the same day expiration contracts. But then it goes back to the basics, what we say every single week, where no matter what account size you have, you need your bid and ask to be 20% or less. You want your open interest to be 100, and you want your delta to be 19 cents or higher. So in that case, if we were day trading, technically you could trade these contracts right here. I personally won't because they're at 19 cents. I mean, $1.48 to $1.50. I mean, that's cheap as it is. You know, it's $150 for one contract. You're gonna lose 20, 30 bucks. You're gonna win 20, 30 bucks. Now you go to something different like Amazon, who's more expensive, and these contracts are cheap too, 90 cents. And this is the thing: if it moves $1, you're making almost 50% ROI. But now, if you go to next week's contracts, right? If you go to next week's, same thing. If we were day trading these to be safer, once again, at the money, these two would be the two contracts I would like. $254, $147. If you don't have that, you can go all the way down here to the 19 cents or higher. You could buy one contract for 79. That's still feasible. But just understand, if I'm in a trade and I say I'm up 30 or 40 cents and I took this contract, you're going to be up, 79 cents? You're going to be up 4 or 5 cents. And that is me being up 30 cents here and you being up 5 cents here is equivalently the same from an ROI standpoint. Are you following me, Gretchen?
Yes, I'm following.
Gotcha. So when you go out of the money, just understand that. You know what I mean? Don't look at it like, why is everybody up a higher option dollar amount? And that's going to be the answer why. So hopefully that helps you determine how you get in a strike. Hey, yeah, perfect. All right, we got any other questions? Andre, what's up? You got a question? Or you good, bro? All right. Anybody have any questions? I'm good.
Yeah.
Yeah, I have another question on the alerts from the Discord channel.
Yeah.
That last number, I think it says set your percent for your stop loss, and then there's a number. Is that the number where the strike price should be, or is that where the stop loss?
Yeah. So this number is where the share price alert actually triggered, and it's saying just set your stop loss at 30%.
Okay, so that number is really not relevant to the actual trade
No.
that you're.
The 30% has nothing to do with the share price number in this alert.
Okay, so
That's
again,
that's just for you. Say this alert comes in, and you see you see it say 4, and it's a sell signal. If it's at 475.16 and you take the trade at 474.75, would you? I mean, is that close to the alert? I would say not. I'd probably be risk free at that price. So it's meant to help you not chase the trade.
Oh, okay, I see. That makes sense.
Yep. So if this alert fires off and the share price is 475.16, you go get in and walk your dog 3 minutes later, and that share price says 473. To me, that's not a valid trade anymore because it's already done dropped $1.16 on the share side. You know what I mean? That's what it's telling you right there.
And you would choose the strike price the same way we just discussed.
You would choose the strike price, same thing. If you got this sell signal and the share price was 475.16, you're probably taking the 474 puts or the 473 puts because those are at the money contracts. And if they're too expensive, you can go out a little bit more up until the delta is at 20 cents.
Okay, thank you. That helps.
Yep.
You want a minimum of a 20-cent delta?
I mean, you can go. That's the farthest I recommend going out.
Like, and sorry, just to make sure, 20 cents and higher, correct? Like you don't want like a 15-cent delta.
Yeah,
You want
20 cents and higher.
Okay. And just so I'm making sure I'm reading it right. A delta is like how much the contract will move for every dollar of the stock change?
Yes, sir. So if the delta is 45 and the share price goes up $1, you're going to make around 45. And that's why the weekly hit list is so powerful, because when you take an at the money contract and it moves $1, right? That right there is 15 to 17%, 15 to 25%. I mean, anything more is just a blessing. You know what I'm saying? They're all blessings. You feel me? We got any other questions?
Yeah, I wanted to ask one more
Go ahead.
follow up on what Darren was asking earlier. When he was asking about setting the stop loss and setting the take profit. Were you talking about futures at that point? Do you trade futures on TOS?
No, I don't trade futures. I was showing him how to put a stop loss and take profit on the option chain, because you can trade options the same way you trade futures right off the DOM.
Oh, gotcha. Okay, thank you.
If you need help with that, we did a class on that as well. I could tag you on.
Oh yeah. Okay, thank you.
Absolutely.
Is that master class that you did on the 20th? Is that the one that covers the Iron Condor as well?
What's it called?
Let's see. It says weekly hit list masterclass 8/20/24.
No, that says weekly hit list. Look for Iron Condor Masterclass.
Was it recent or was it a while back?
I'd probably say 2-3 months ago.
Okay, it was a while ago. All right, I'll search for it.
Yeah, if you put a thing and just type in Brandon Harbaugh and type in Iron Condor, that video should pop right up.
Yeah, there it is. 6/11/24.
There it is. So you watch that.
Put your
and-
name in iron and it wasn't enough. Apparently, I needed that condor in there.
Hey, that's crazy. That's the algo, you know? All right. Well, you got any other questions? Or are you good?
Last question.
Go ahead.
So with the floor and sink breaks that you taught today, once you get in those, like, how long do you normally stay in? Is it a few candles, or how do you determine your exit?
It's solely based off price action. So sometimes it happens in 2 minutes. Sometimes it takes 45 minutes, right? And let me see real quick. Let me share my screen again. So it's strictly based off of the price on the chart. So like Microsoft, in this example, that's a 5-minute trade. But if you go back to something like
So
did
Tesla,
you
man,
see
that one that was covering the ceiling is a good one. That we sat in there and just waited for it to break.
Yeah, so this one broke the ceiling, 5 minutes. Remember, we have these lines for us to take actions, Gretchen. So if it gets close to that purple line, you got to be taking actions. Like if you're not taking actions, then what are you doing in the trade? That's what you'd have to tell yourself. Me, if we break the ceiling and we get close to this purple line, I'm going risk free. If I look at something different like cat, here's an example. 5-10 minutes, I'm in the trade. I'm out of the trade. Let me try to find something that took its time. All right, here's one that took its time. Apple. In this right here, we got rules. We take our call trade here. We never closed underneath the midline or the bottom line. At this point, did we get close to our purple line right there? Yep. I'm gonna put a
Yes.
yes. So in this case, I'm in this trade 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. I'm in this for 55 minutes. I will hold any of these trades up until about 12 o'clock noon. If they don't break or hit the targets by 12 o'clock noon, I'm cutting it to prevent me from holding the trade all day long.
So with that Apple trade there, I can see where, it broke out. So you would get in before the candle closes as long as it breaks. Is that right?
Absolutely, absolutely.
Okay. So then after you get in, like I'm looking at, I see green, green, green. So clearly some of those had to be bearish candles.
Absolutely.
They're still green. So
They're
is
still
that-
green, but I mean, so the ones that are like this candle right here is a bearish candle because the outside of it is cased in red. So
Oh,
the Swing Master Pro trend is still up, but that's just a bearish Swing Master Pro bullish candle, if that makes sense.
It's hard to see. It's hard to see with this screen share, but yeah, the bearish candles, they have a red outline.
So, like-
okay. Thank you.
Yep, these candles are bearish candles, but Swing Master Pro, the trend's up. That's why they're green. So in this case, I'd be taking my call right here. And this is the thing, Darren or somebody else might be like, well, I'm down. And if you put your stop too tight, you'll get stopped out. But my rules, it never broke down. I would have held this trade, and it would have prevented me from taking a loss. I would have walked away with a winning trade.
Sweet. Yeah, that's good. Thank you.
Yep.
Okay, so your target is already outlined and set up. Purple.
Yep. In purple.
Okay, perfect. Thank you.
So
Now, this is
Brent,
the thing. If
Go ahead.
even though this is the purple line, if we get close in the vicinity, like right here, I'd probably go risk free, probably right here. Like I'd say I'm going in a trail stop. And that's exactly what I would do.
hey, on that, like using this as an example, you've got what's your mid right there? It's 230 and change ish, 230.17. So on Thinkorswim, are you just looking at, you go over to your chart where like you would set your triggers and you're saying you just put a marker on 230.17 and you say, okay, based on that.
Well, you can't hold on a second. You can't do that because we're looking at the share price. It don't intertwine with the option price.
Yeah, that's all I'm saying is like how
You
would I
can't.
translate
You
that?
have to watch it.
Yeah. Well, I know the option price, but I'm saying
I know
like,
what you're trying to do.
yeah, I'm
And
trying to
the
correlate.
And the reason why that don't work is because this right here. So in the option candles, this candle's low. You could put a stop out in place, but as you trade sideways, that option stop out might drift up a little bit because now it's losing a little bit of value, and you're going to get knocked out down here, and you're going to say, "Well, I lost that trade," and we're going to walk away with a winning trade.
Yeah, I'm trying to like in my mind correlate the underlying stock price
Yeah,
to
see,
a
and sometimes
marker.
you can't because when you take same day or following day expirations, when you get in a situation like this where it trades sideways, let's say you enter here for $1, and at this time your stop out is we'll say what I want to say, we'll say 70 cents. As price goes up and comes back down, your 70 cents, this might be worth 70 cents up here now, and it might knock you out. That's a poor example, but I'm saying you get the gist, right?
Yeah, I'm thinking yeah, like I'll have to mess around with the trigger just to get comfortable because I think if
So
I
when
just
I take the floor and ceiling, I don't bracket order these. I trail stop them
and then
because
you just
I
set your
manually
alert
watch them.
for mid.
I'm waiting for a 5-minute bar close underneath that mid price for me to take a loss. So I don't care if I'm up or down at all. I don't even look at it, right? Because I know the power of it. And then I have it. So what I do is I take my buy right here and I immediately go in and I'm one click away from triggering a trail stop. I'll go 10 or 15 cents based on whatever option price I paid. If I bought in at $2.20, I'm probably putting a 20-cent trail stop in. If I bought this contract for $1, I'm probably going to a 10-cent trail stop. What I'm doing is I'm one click away from triggering that into a trail stop. And when it goes, it comes down, it comes up, it comes down. So instead of this knocking me out on a winning trade, I'm going risk free on my trail stop over here.
But you just have it loaded, like you haven't
I just have it loaded.
yeah, you had to execute that. You would just say once it
Yep,
gets
I
to the
wouldn't
point you're
execute
like,
it.
now I'm going risk free.
Yep,
All right.
yep.
Yeah, because if you took that 20-cent trail stop there when it broke, you would have stopped out
Well,
like on the next two.
absolutely. And why would you put the trail stop in when we're not even close to the target?
Yeah.
You know?
Yeah, that makes sense. So like once you like so when that you get that large candle that's jumping up over the ceiling, you see that next one come up was on this the 5 minutes. So that second candle after it breaks the ceiling pretty well, then you would say, all right, now I'm gonna put that trigger in.
Yeah. Yep. Do you teach a power hour strategy? Why you see Wendy be taking them? So this is what we kind of do. We go on a 1 minute time frame in the last 5-6 minutes. Whatever color candles your trade is, this right here is 40-50% real fast. So our Swing Master Pro gave us a sell, and our candles are red. So you look at SPY and you do the last 5-6 minutes of the day. What colors are our candles? Our candles are red, right? You set your alert here at 50. Candles are red. If you took and it's very risky. This right here, that's another 50-60% ROI. You know what I'm saying? I don't want to open up a can of worms, Gretchen. It's late, but that's kind of what we do. You go back to a previous day. Right here. What's our Swing Master Pro candles? Right here. Same trade. 50 after, they're green. You take your buy, price pushes up. Even if it came down, you entered it right here. That's enough to get you 10, 20%, 30% real fast. Because they expire like in 10 minutes. They move really, really fast. But that's super, super risky. If you're not fast, then I wouldn't recommend trading it.
Thank you.
Yep.
Tomorrow you release your weekly, was it you still call them weekly income plays, the ones that are strangles?
No, they're weekly income plays.
Yeah, as I was saying, you could still call them weekly income plays, right?
Yep.
And those, since they're at the end of the week, you just market order into them, or you like, because there's never like a target, right? You just like basically hit sometime in the last 30 minutes of the market being open, you just enter that trade.
Yes, sir. When we put it out, so we'll use AI to determine which one is best for that week, and we keep winning. You
I mean,
know.
that one was nice because like for me, I was watching it all week. I'm like, man, this thing is like losing. And then when that announcement came off, it just went the other direction. And then like I guess because of the delta between the two contracts, like
Hey,
one was
we shake and bake, moonshot Scott, baby.
I appreciate you helping.
Hey, we crazy. All right. Well, hey, it's 10:30 Eastern time. I'm gonna get some sleep. We got live trading tomorrow. Be there, be square. What we just talked about tonight will be on there. We'll implement it tomorrow. And what better way can we have it to kick it? So cheers. If you have any questions, comments, or concerns, never hesitate to reach out. Hopefully we'll see you there tomorrow. I'll put the alert out. But I appreciate you guys.